Welcome to the StockManor.com studios here in the cold Black Hills of South Dakota today. Not quite as nice as what we've had. Mother Nature rolling in for, probably one of maybe two more storms left in the season before we get into the really warm season. As for the markets, they were cold today too. Consolidation day, which is to be expected after all the kind of movement we saw last week. As you can see, they really didn't go anywhere. I hope you guys decided to find something else to do today. If you're a swing trader, like to hold for a few days at a time, you did not miss anything. This is a good day to get some work done. And you can see by the chart in front of us, not really going anywhere. So we're still stuck in this sideways consolidation, really kind of now between that 12.1 and 12,000 mark that we've been talking about for a while, but literally nowhere today. A high of 12,050 and a low of basically 12,000. So a 50-point move all day on the Dow. There's just nothing to do with that. So if you're an indice trader, if you like to trade the ETFs, there really wasn't a whole lot for you to do today. Now, as it still is, though, this is still a high basing formation, still waiting for pushes one way or the other, but ultimately any breaks up and above this can give you some entries to the long side coming into the Dow now. We're still stuck at around below the moving averages, and this is what we're ultimately looking to break. Now, after one day, we're there yet again, holding on to what could evolve into, potentially, a high base formation on the daily as well. Maybe a little bit of a pullback. Maybe we see a little bit of a drop. But looking at these lower levels, as long as it doesn't go very far, the bulls still have a really good shot here of keeping this thing up and moving it up in the bigger picture. NASDAQ 60 minutes, same type of story. It was down just ever so slightly today, as were most of the other indices. And you can see it resting here right on top of these two moving averages within the 60. What have we been looking at? 2275 to 2280 mark. Yes, no approach to it at all today. So, little bit of a move down. However, still very controlled by the markets themselves. No one really taking over. These are the bigger areas to be watching to the upside going into the rest of the week on the NASDAQ. And from a weekly back below the 20, worry more about that coming into the end of the week. SPX 60 minute doing the same thing, wandering its way down. Not broken really anything necessarily from the short-term bull side. That is, we have still hanging out above these areas here, the 1290 area in particular. And you can see where it's starting to wind its way down into support. It's whether or not that support will hold going forward. Still like these overhead levels for opportunities to the long side in the SPX, and moreover, those moving averages. Yes, kind of ugly for the SPX above us. So looking for breaks up and over those areas to see if we can't keep this little bit of a bull run, at least here in the short term, going. Right now, things still looking fine. Big run up yesterday and a sideways move today. Still got to give the edge ever so slightly to the bulls. Now we're down a little bit in the VIX, but still above the 1920-ish mark. If you want to see or want to kind of definitely lean more towards the bull side, you want to see this start to whittle its way back down into these lower areas over the next few days. From a weekly, you can see where we got above the 50 and now just haven't been able to hold it. But as long as we stay in this area here, between these two lines I have drawn, still on edge about where the bulls are going to take this, or the bears in that case are going to take this. The VIX is remaining high, which means there is still uncertainty within the markets. You can see it reflected here in the options trading through the VIX. Apple 60 minute was up about $2. Not much to do though. A gap up, a move right back down, and you can see it trying to hold this 342, 343, 345-ish area. All these areas I've been talking about. Still looking for pushes up and above this area to try to get Apple in a little bit more of a go formation here for the bulls, but you can see it just really weak, as is the NASDAQ. Just 4 days of sideways consolidation, a little bit of a move up, but no real strength today whatsoever. Still not getting up and above these areas. I'd really caution you, wait for these breaks above these areas before you try any more major moves within Apple. Just make it prove it to you. We've got a lot of sideways consolidation here, and so not much to speak of from any of the market participants today, really. Apple Weekly here holding above the 20-week. Talk more about that later in the week, obviously. That can turn into anything by the end of the week. FAS 60-minute straight sideways. A gap up, though, to start the day, but you can see it kind of wind its way down all day. It just kind of trickled downwards. If you got short at the beginning of the day for whatever reason, I don't even know why you do that, but if you got short at the beginning of the day, the most you would have made is about 70 cents on the trade, which is not a bad move necessarily overall, but man, talk about a slow bleed all day long in the FAS. If you take a look at the daily too, no indication one way or the other. We're not below the 29 mark and we're not above the 31 mark, and those are my bigger areas yet to be watching going into the rest of the week. FAZ then doing the same thing with a gap down and a slow run up all day. Did get into some overhead resistance areas, but you can see nothing really broken here. It's holding right at this blue line. It's coming down from a previous channel and working itself in with a new channel, kind of moving in this upwards direction. So which one will break? Gotta wait, guys. As I've said time and time again over the last few videos, you're better off, if you like to play FAS or FAZ, wait for the more major breaks before you play this thing, because you can see what it does. It'll move for a few days and then just wander sideways for days at a time. Look at what we saw in through here. Not bad from a day trader's perspective, but if you're going to buy and hold for any length of time, this type of trading can drive you crazy. Just drive you crazy. Yeah, I liked what I saw in through here for the bulls. We made some pretty decent cash on this to the move upside, but now I'm really back in kind of a neutral position here. These things can be great trades, and they can bleed you dry very, very quickly. You're just better off, guys, to wait for the larger breaks one way or the other on these 3-time ETFs. Let them go one direction or another before you make your move. So still below this area, still, speculative above this area. Really, from the bigger perspective, you're better off to, if you're long FAZ, get your stops in place and then just let it ride. If it goes up, great, but if it doesn't, let it stop you out and live to play another day. That's the way the professionals do this. We don't get so wrapped up in I have to make this amount of money on a trade. You really set yourself up for failure when you do that. Or, man, I really think this thing could get to 59, and you hold and hold and hold, just hoping and praying that it will. And when it doesn't, you're sadly disappointed and usually ends up in a pretty large loss before you cut it off. Don't play that way. That's the way the amateurs play. Start thinking on a professional basis, and that is wait for the more major breaks, take your entries there, make the money where you can. And that's the best advice I can give you. That, and get yourself not just an education, but the right education. I stress this all the time, and I know you guys get tired of hearing it, but I just can't begin to tell you what a difference it makes. I know what it did for me in my trading, and I know what it can do for you in your trading. However, I can't force your hand. That's up to you. When you want the right education, then you have to go out and ask for it. So one of these days, I hope you guys do, before you lose a bunch of money in the markets, figure out that an education is very, very important. What I know isn't much different than what you do. It's just I have a much different set of tools that I use, which gives me an infinite advantage over most people in their trading. Okay, back to the beginning. You can see a wandering sideways. The Elliott wave is up and going here. We're going to meet Thursday, March 31st, 9 p.m. Eastern. You can just click right here on this. It's on the side of my website here, right below the newsletter. Click on it, sign up, get yourself in, and then we'll see you here March 31st for the Elliott Wave webinar. And until tomorrow, just be careful with your trading coming into tomorrow. Watch for any potential gaps up or down, as it might be. And let's see if we can't get this thing to move here within the next couple days, one direction or the other. All right, guys, see you again tomorrow. Bye.